Hi, everyone, and welcome to Bitcoin Analysis Beyond the Block for September 2024, proudly brought to you by Ainslie Crypto. My name's Chris, and today we have our expert panel with us as per usual, Joe and Isaac. How are you going today, gentlemen?
Doing great, Chris.
Good, Christopher. Very good. Thanks, mate.
Now, last month we were very excited that it was all going to go up. It's sort of gone absolutely nowhere. I think Isaac was pointing out to me before, we're kind of exactly where we ended the last video. So lots to talk about because how did we end up here? It's sort of been up, down. We're just sort of sitting back where we were ish. Let's
Yeah.
go through it in the usual structure: big picture macro, Bitcoin market analysis, and the technical. But probably to start us off with this macro, what's going on, Joe? Look, you look at the big picture here. We haven't really, but we already looked at this, that we had that bit of a tick up in the macro cycle, but not really a whole lot of movement. Is it just September doldrums that we're looking at? What is it?
Yeah, so this is the same chart that we had last month. We haven't actually updated we haven't received the data to update this chart at the moment. So in terms of where we expect this to go next month, we'll talk about corporate tax season and liquidity like as we go through this chat, but I'd expect that chart to probably print another green dot sideways to slightly down when we eventually get that data.
And Isaac, like you were cautious as always. Joe and I were a little bit more optimistic that we might have had a better start to September. Is this kind of what you're expecting?
It is. It is. From the Bitcoin technical perspective, all the indicators and the metrics I was sort of looking at were pointing towards more consolidation, which was why I had that indecisive sort of when we summarized, I said, I'm really leaning more indecisive on what's going to happen. Well, it turns out we are sort of in that stage right now, and that would match with what Joey's saying too, especially with the green dot. I would personally be expecting it to be, sideways or a little bit more down.
Throwing cold water on our party here. So, Joe, let's dig into what's actually going on beneath the surface. What we do have new data on here is the US growth. So this came in just the other day. It started a month. The manufacturing data towards the weaker side, the services a little bit stronger, but our leading indicator appears to be pointing down there. What was your take on the growth aspect, particularly looking at this US data?
Yes, we're still grinding out that bottom as we said last month and the month before. I suppose you've got your services in expansion and your manufacturing in a bit of contraction there. Our leading indicators starting to point down. It's pointing down, but it's certainly nothing to, generally speaking, worry about.
I mean, the 3-month one here I just pulled up on the screen is pointing down
that's a bit more aggressive.
But I mean that has been a little bit more volatile anyway, that particular indicator.
Yeah, well, the further you look at, the more volatile an indicator is going to be. We've got that 3-monthly indicator pointing down just due to an increase in inventories. So that's
inventories building. Yeah. Yep.
Inventories building up. So in terms, I would say that's still within a range. So I'm not looking too much into it at this point. But in saying that, also, this is a symptom of what you would call a very sort of slow economy. It's neither pumping or falling. So, as we've said multiple times on multiple occasions in previous episodes, at some point the government's going to want to goose this economy, which means more stimulus to drive manufacturing and those services higher,
and
which is great for assets.
Absolutely. Is this the missing piece of that? Well, not the missing piece because we've seen it coming for a little while, but inflation is certainly still showing signs of weakness. There really doesn't appear to be anything in the way of the Fed rate cuts that we're expecting to come out of the US, or just generally more stimulus and more liquidity, which we'll talk about in a second, to come.
Yeah, so in terms of Fed watching, I suppose, the Fed are less concerned about inflation now. I think even though they're still a little bit above their target of 2%, well, 3% might be the new 2%. They're more looking towards the jobs market. And we had the jobs market come out last week, and that printed about a 4.2% unemployment rate. So it's basically what was expected. Going forward, I think over the next few months, they're going to be less focused on this and more focused on employment. And I'm pretty sure. So next week or the start of the week after, I think it's about 8 days away, the Fed will meet. And they're basically priced in a 75% chance of a 25-point cut and a 50% chance of a sorry, a 25% chance of a 50-point cut. So I'm betting on that 25 at this point.
And that does kind of line up probably with that previous chart that we talked about with growth, because it wasn't exactly falling off a cliff, but it wasn't looking great. But when you sort of look forward on that, I would tend to think both that inflation and growth picture are kind of still the perfect mix for more liquidity, which is what we've been arguing all along. I know a lot of people were questioning our discussion on that, saying, well, they're not going to pump more liquidity into the system because everything was too good. It's almost like now that we've got it, that it's not too good. It's sort of in that little bit of a murky thing, that situation that everyone goes, well, hang on, now they're worried, but well, that was kind of what we were predicting, because we're saying it needed a little bit more weakness to really let them come fully at it.
Yeah, and in terms of the Fed and in terms of the US government, they don't mind a little bit of inflation, but they don't want deflation. And they don't mind a little bit of job loss, but they don't want large job losses.
Yes.
So, and I think they're really trying to nail that soft landing. They're trying to, some would argue they're not ahead of the curve and they're falling behind, but I think this is definitely a step in the right direction to try and get that soft landing. Time will tell.
We talk about liquidity all the time. It's our favorite thing to talk about, you and I particularly. We've shown this chart many times before, just showing that there is that sort of direct correlation between global liquidity and world asset prices. So we know the direction that things are going. We've shown this chart many times as well, this idea that particularly gold and Bitcoin serve as monetary hedges against monetary inflation, the difference being between CPI inflation or consumer price inflation, not really capturing the full breadth of what really happens when there's lots of liquidity pumping into the system. So everything still seems to be heading in that direction. You mentioned before that, and this data, we're still looking at August data here, but we'll get the September one sort of next week or so. Potentially a little bit of a pause here, which could be reflecting in what we've been seeing generally with some of those assets.
Yeah, 100%. If you just flick through to the next chart, you can see it even more granular on the weekly level, how we had it might be the chart after this one. We had a huge rise in liquidity last month, which is what we were getting a bit excited about, and Isaac come in and tempered us down a little bit. But I would say that, based on the way assets are trading in September, which is seasonally quite poor for asset prices and therefore liquidity due to corporate tax season. So that's money coming out of the system to go into the federal government's spending account, the TGA. I'd expect when this gets updated I believe it's next week, we get an update on this. It'll probably be pointing down. It'll be down to flat at best, I imagine, just based on the way that assets have been trading over the last few weeks.
Well, and following on from that, if Bitcoin was sort of almost the one-to-one as it has been, it was surprising at the time. See, we were thinking that Bitcoin would probably play catch up, but we may be caught slightly off foot there, because it might have been that Bitcoin was actually reading that correctly, because we've ended up sort of down here a little bit, and possibly liquidity will be following that down.
Yeah, well, I got some charts that are in terms of seasonality that I'm going to share once we get through Isaac's first part, so we can reflect on Bitcoin. How Bitcoin generally plays catch up in the last quarter of the year, and in terms of liquidity expansion.
And I think just to wrap up this section of it, though, even though this is down, current price we're seeing down here somewhere, it still paints a very clear picture that, because this chart isn't on a log scale, this is just on a normal scale with the price of Bitcoin, and you can see very clearly that it might seem like a big pullback that we've had in terms when you're looking at it day to day, but when you zoom out a little bit and look at it over sort of last 5 years, it's really been remarkably resilient. We've been saying this the whole time, and that has still been the case, I think.
Yeah, that's right. Yeah, 100%.
Right. So we've got sort of that big picture idea that we're in this sort of not quite sure waters, but still we're expecting nothing's really changed there, I suppose, from our perspective of what's coming next. Isaac, we'll come over to you now and look at some of the specifics in the Bitcoin market analysis that you've been looking into. Starting off, you use this score regularly to give us a bit of an indication. You've got 2 boxes on here. Do you want to sort of talk us through what you've been looking at?
Yeah. So what's really standing out to me, and I've sort of, said this multiple times in previous videos, is we're looking more and more like the last cycle in terms of that consolidated period before we have that euphoric stage. Now, the only difference is we're further along in the cycle now than when that happened in the previous one. So we sort of came out of that bear market during that 2019 phase, spiked up very fast, and then downtrended with the MVRV score. This cycle, we've actually sort of traded a lot more longer time period, and then we've had that consolidation down in terms of the MVRV. So there is a slight difference there, but there is similarity in how it's sort of shaping out now. It's an observation to make, but it is tricky. It is tricky to know what's going to happen from now. But I would be positioning myself more towards the perspective that, we're just rebasing for the next leg up, especially from the macro backdrop, considering we are expecting liquidity to enter the market.
Do you think, and I'm starting to think this a little bit, that part of the reason this is extended, apart from all the fundamental reasons that we know of why it's taken longer post-COVID for all that liquidity to go through the system, all those reasons, but part of it, that this is kind of the maximum paying scenario, that it needs to go a little bit longer because everyone was expecting it to move quite quickly. So it needs to not move that quickly for everyone to panic. And you've certainly brought along some indicators to show that seems to be what people are doing. Is that your take on it here, that that's actually probably the best possible scenario for a higher price, is that it has been that little bit longer, which really loses confidence? I
think it is, exactly. And then also you got to think about, the previous price action coming into what we're experiencing now. We saw an all-time high before the halvening. Okay. So that was already accelerated. So now I guess this is I would view it as more healthy consolidation, just, shaking out those weekends essentially. You might have bigger players taking profits here at this region. I would view it as a rebasing zone before we have that next leg up. And you view it via the MVRVZ score because it's realized price and the market price ratio. And yeah, to me, that's what I'm sort of seeing in that. Obviously nothing's set in stone, but from a technical perspective, one would expect this to start to find a bottom relatively soon, in my opinion.
And I think this captures it really well when we start to look at sentiment, and you do some specific sentiment analysis here, because people really did lose confidence. It was almost that extreme greed to absolute fear in what it seemed to me like almost record time.
Yeah, just look at the speed of the chop there. You can see what we've seen, especially for this region, up, down, and quite an extreme move. You can see that, opposed to the last halving zone, where it was more, I guess you could say linear, even though it was still quite, aggressive growth. But in terms of a line, if you were to track it up, you could put a line through there and say, yeah, it was trending up. But this one's been, it's very up and down. So, I guess you could view that as our hands are being shaken here. But, relative to what price is doing, we're consolidating. So it's interesting. So that does give me the feeling that this is a rebasing sort of time period right now.
And it always strikes me as strange that there's so much more certainty in the Bitcoin market this time around with the ETFs and just generally regulatory certainty, all these things that shouldn't see that level of sentiment swing compared to what it was before, where there was nowhere near that level of certainty, yet everyone seemed much calmer. It's actually quite fascinating. And when you zoom in and look at it on the really short term, this chart, wow.
Yeah. I was looking at this one last night and I was like, wow, I didn't expect that to be that low, because on the other metrics, it's not that low, but this one obviously is unique in its own way, but it sort of tracks, the forums, it tracks X, it tracks Reddit, it tracks these different metrics, and it prints out a sentiment score. So right now we're at I think this is the lowest mark I've ever seen that we've put in these videos, which is quite insane because we haven't capitulated for this specific video we're making here. Now, obviously in the last one, we did have that situation where we hit that capitulation low. But now we're just sort of downtrending. And I think the sentiment is quite bearish, especially on the crypto Twitter and YouTube. I've been seeing a lot of the mainstream media influencers saying, a lot of the red thumbnails are starting to come out opposed to the green. So that's generally an indicator that, retail is starting to fear, because they sort of tailor to what the market wants. It's interesting to see that happening. So, is a bottom on the horizon? Potentially.
Well, and Joe, you tend to look at a lot of that stuff as well, just from, sort of passively observing what everyone's doing. Is that the feel that you've gotten there? Because I know you made a comment to me the other day that you actually couldn't believe how low some of those numbers were relative to what your general sense was.
Yeah, I'm not sure if I'm just impartial to it now that we've been in the market so long. And we've got somewhat of somewhat. We do have a framework with leading indicators and that it's going forward. So I probably don't worry about it as much as I used to. But yeah, the sentiment's just been has not been great. And as Isaac pointed out, the price is still at time of this recording we're sitting at about 57. So I don't even think it's necessarily the price. I think it's just the time. It's just the time people having to wait and just getting tired of it.
And I have heard that said recently that that's actually more brutal for the market than a big correction in price, because time eats away at people's brains. Price, they get over fairly quickly. Once the prices move, they go, well, okay, it's done that move, and they mentally adjust. With time, it's much harder to make that mental adjustment.
Yeah, give me a 30% drop and a rebound within 30 days anytime over 7 months consolidation. So
really, really quite fascinating to watch the psychology at play. Another chart here, really no difference there for what we've seen before, that nothing really exciting happening on the search trends. This one you've talked about a couple of times, Isaac, the Bitcoin active addresses, and you're paying to point out that it's not really something you would do a technical analysis on, yet kind of seems to be following a little bit of
I just thought,
process.
why not chuck a line in there where I think I'm viewing support as, even though no one's probably doing it. But we seem to have found a bottom here, yet to be tested. So we're going to see what happens going the months ahead. But it is something I'm going to be looking at, because you can see that when the market top does come in, we have an acceleration in that towards the top. So definitely something to keep an eye on. Right now, you wouldn't expect the top to be in, because look at where it is positioned, right? Historically, if you look at it at these lows, that actually signifies a good buying opportunity. So yeah, I wouldn't be looking at this right now and saying, oh, the top's in, like a fair few people are thinking the top's probably in, especially on Twitter and etc. But yeah, just something to be looking at.
This monthly Bitcoin analysis is brought to you by the Ainslie Group, Australia's trusted choice to buy, sell, and swap gold, silver, platinum, and crypto online or in our Brisbane and Melbourne showrooms. With over 50 years of operation, we're your reliable partner in wealth management. If you're looking to buy tokenized gold or silver anywhere in the world, check out the Gold and Silver Standard, the security of real-world precious metals combined with the flexibility of blockchain. Joe, now this one has caught lots of people's attention. I've seen even some mainstream coverage on this. We've had some negative Jim Bianco commentary around what's going on here. Love to know your perspective on what's been going on with these ETF flows.
Yeah, Jim sure does like to get on there and criticize it, but also forgets that it's been the most successful ETF launches of any product ever. So we actually saw in line with sentiment, exactly what Isaac's talking about. We had 8 straight days of outflows last week, which I don't know what the flows were last night. We're still waiting for that data to come out. I suspect it's an inflow based on price action. But 8 consecutive days of outflows, $1.2 billion if you're looking in dollar terms. But at the end of the day, it's still only about 5% of the entire holdings in terms of Bitcoin of what the ETFs are worth. So, sentiment's going to eventually, and maybe the capitulation needs to come from the ETFs as well, and maybe we're seeing that right now. So time will tell, but yeah, certainly fascinating to watch, considering this is been the biggest outflow we've had so far.
And I don't want to give too much airtime to Jim Bianco's views, but he was particularly commenting on what he's termed as retail spectators, effectively, that this wasn't institutional money. It wasn't the big players. They're only small transactions. Do you have a view on that, or like a general sort of a take?
He does say that, and I actually find it quite bullish if that ends up being the truth. So, if it's only
does that mean it's still
to
come, right? Like that institutional play is still to play for.
Yeah, that means that if what he's saying is true, I don't see that as a negative at all, because that money's still got to come. There is some institutional interest in there. We've seen it. We've got the statistics on it in terms of what funds are buying. But so I won't completely agree with him and say it's retail driven. But if there's still a lot of institutional adoption to come.
And
We're only
I
6
think
months in.
absolutely, I agree with that. And I also think what he's lacking there is any comparison, because you go, well, okay, what does that actually look like compared to the gold ETF, for example, or
Yep.
to many other ETFs? It's probably very similar. I think he's cherry picking what he wants to look at there to try and paint a particular picture. But I didn't find it overly. I sort of took it the same way as you. Didn't find it overly compelling on the negative. I sort of saw it as a positive to say, well, okay, so it still hasn't come yet. We're already at these numbers. That's amazing.
Absolutely.
You also look at it from a slightly different angle this month, looking at the monthly returns across really a long period of history here with Bitcoin. What was your general approach here, and what did you find when you started looking into this?
In terms of price action, what we've seen from August to September with the chop, and we're probably actually more down than sideways, to be honest. It's seasonality wise, it's played out exactly, well, like most years actually have played out. So,
well, even these positives are not big numbers, are they?
They're not big numbers, and it's back to, I'm not going to say it's the exact cause, because to blame any one thing is inaccurate. However, we're talking about a liquidity season in August and September. In September generally isn't great, because a lot of money's been drawn out. If you're looking at particularly the US, a lot of money's been drawn out of money out of bank accounts paid into the TGA for tax reasons. So, yeah, not anything surprising. But if you flick to the next chart, I've highlighted the boxes that are the years of the halvening.
Yep.
Yeah, so you've got, as you can see, we've only ever had green in the last 3 months of the years of halvening years. So, and that's
big
basically
greens too. Like they're much bigger numbers there.
Yeah, well, statistically, 45% of the gains come in the last quarter of the year in those halvening years. So, yeah, if we get anything like that, we're going to see some pretty significant returns, considering what we're already up, the amount that we're already up this year. I know it doesn't seem like we're up, but we are actually up still significantly from the start of the year. So, yeah.
Well, just then looking back at this, like that really goes to show you need to be there when the gains are made, don't you? Because look at that, February, 43.55%.
Yeah,
like that just if you were, at the beach in February.
Yeah. You have to be in the market. It's time in the market, not timing the market. So, I can't remember exactly what the statistic was, but if you weren't in the market for the 10 best trading days of the year, your gains are cut in basically 20% of what the gains actually are, or something. I can't remember exactly what it was, but something very similar to that.
Yeah, it makes a lot of sense. And when you spend a bit of time looking through this, you see big numbers all over the place, followed by relatively small numbers. So yeah, it does make sense. You got to be in it when that happens. Now, you've also brought this chart along, which we were looking at just before we started recording, and this seems quite exciting. Talk us through this one.
Yeah, so this shows basically Bitcoin does a 6 times in price for every 40% growth in age, if that makes sense. So currently we're at about 15 years old, which has got us to around 60K loosely. And by the time we get to 2030, using this model, we expect price to be $360,000, which would be in the range of about a 36% compound annual growth rate, which is and to be honest, like a lot of people look at the stock to flow models and they look at the power law models. The power law is predicting 1 million by 2030. I like this one. It sounds probably more realistic than $1 million by 2030. But at the end of the day, if your compound annual growth rate is 35-36% for the next 6 years, you're going to do extremely well. If that's the absolute base case. So
we can treat this as the worst case scenario, and Michael Saylor's however many million by 2030 as the upper bound.
I think he said 13 million.
13 million, right? So somewhere between, what was it, 300,000 and 13 million is where we expect to be.
Feels very high. But you look at it as a risk adjusted opportunity in terms. So if you're at 35 versus the Nasdaq, which is around 17, for example, the Nasdaq's the best performing stock market in the world, followed closely, but a couple of percentage points behind by the S&P. Your risk reward's double in terms of a return over that period of time. So, in my mind, I think you're a little crazy not to have at least some allocation.
And that's that chart we haven't got here, but the Fidelity chart that talks about risk adjusted return, and just Bitcoin's out in its own little bubble away from everything else because of exactly that.
Yep, 100%.
Isaac, sorry, Joe.
I was going to say, we'll bring the chart next time.
We'll bring that one. Well, it always is a nice little FOMO reminder from time to time to go, well, really, why are you in other things? It doesn't really make much sense when you compare it to Bitcoin. But now we get into the technicals, which is traditionally where Isaac shoots us back down, because you built me back up. If we're following that arc, the story arc, we're at the highs of the story, then we really need to move him earlier. I think get him out of the way before he smashes us down again. What do you have to tell us here with these cycles? Because maybe I'm sensing there may be a hint of positivity here this month, Isaac.
Right now, what I'm expecting is not too much has changed since the last video, especially what we're going to look at in the next few charts. But this one is one I'm going to bring every month, which I have. And, it suggests where we are right now, we're still in a consolidated period. And sometimes we have to accept that, Like if you look down to the last cycle, we had the exact same thing, except it was slightly more trending up post-halving going into that phase. Now we're still, we're trending sideways. Let's just call it sideways. We haven't yet seen the rise up, which we have seen in the last cycles. But, with the liquidity backdrop, we should be expecting to see that. And we are going to continue to say that until we see that. It's what we expect, right? And then the green zones where we're going to be looking to take profit. It's just a region to look, let's switch our bias towards, one more bearish now, because you can't maintain the full bull mode non-stop, because that would be unwise. But where we are now, we're still remaining in that bullish phase, although we are experiencing consolidation.
And I do love that it puts it in perspective of just how flat it's been, and relatively speaking,
it's like
they're not huge moves. It feels like it,
because
it is in percent, but when you look at it in the context of the chart, it's a sideways flat. There's not huge downward movement there. It's
like the time stuff you guys were saying before, it extends out and people get tired of it. And then eventually, after enough time that carries on, enough people are out of the market, they forget about it. And then before you know it, it starts rising up again. People come back in again. It's the same sort of story every time. And you can see it within the visual of the chart and the interest that comes in.
It does make a lot of sense. You've been keeping us updated on these sort of stochastics and what we can, or relative strength, what we can sort of expect. Looks like it's been skipping along the bottom here, but probably coming towards the end.
It's in the doldrums, and the stochastics is primarily what I've been using to form, my more, I guess you could say, midterm bias in terms of what I'm expecting. And it's sort of why I had the perspective last video, more indecision, because in the last video, I believe we're in the middle of the range, and we saw that the blue and the orange sort of intertwine at that point, which is typically what you expect when you're experiencing consolidation, especially like this and what we've been seeing. But right now where we are, we're in the lower band, and we're chopping around, and I can't pick a side because it's not flipping the other way around, which is the way you'd expect, where the blue line crosses over the orange line right now. But coming into the 60-day cycle, which we have already, obviously hit in terms of the time period wise, we could potentially seeing a bottom here, but I'm not going to speak too soon because I'm still leaning on more indecision. And it's cool. I'll talk about Boblix in a second, but we're not on that chart yet, so I'll leave it at that.
If we zoom in a little bit, can we get really bullish here? Because on the daily, it's looking pretty good.
I'll give you a few things to be bullish about. If we do, there's a few things that you could be bullish about. First one is there is a potential head and shoulders pattern on the horizon here. Well, it's the inverse, right? In terms of the support, but obviously it's a wick for the capitulation one we had. So I don't know how valid that would be. And then in terms of the stochastic, we are potentially on the horizon seeing a flip potentially but we have to find support here. If we don't, that's not going to be good for this stochastic. Okay, that's what that one's telling me. Other than that, let's skip to the next one. Alrighty, what do we got over here? So this is the daily chart. I just want to raise a few things, specifically the 42,800 level. I just want to point this one out rather than saying we're going to hit it or an expectation of hitting it. It's a very strong support level. Like how I said 52K was a strong support level. We did see a pretty meteoric bounce from it. Obviously, we were expecting a higher, higher bounce from there, but we obviously saw a really good support there, right? I don't think we can deny that. But yeah, 42K 800 is a very strong level. If we do end up going that low, That being said, that's breaking the 30% retracement theory that a lot of people sort of hold in their heads. And that would be, drawing us down to a more 40% retracement, hitting 42,800. So, is that on the cards? I don't know. Potentially, if we do see an extended consolidation period. But as of right now, I'm not going to forecast that far. Yeah, that's what I have to say.
My view on that would be, when you look at what Joe's just put up before with the seasonality, if we're getting, and let's face it, we're sort of halfway through September, it goes so quickly already, or approaching halfway through. There's not that much more time until we're probably getting into those better liquidity conditions of October. So for it to really make that move down, it kind of has to do it now, is what I would
think. It has to have some sort of, in my eyes, it'd have to be some sort of flash black swan event that occurs for it to wick down there or something. I personally am not expecting it to go that way at all. Worst case, I potentially a sweep of those current lows we have in that wick. But in terms of, the seasonality, like you guys said, and the time-wise and the other charts I've been looking at, we should really start to see things pick up going into the next few months. And to get to that low, you'd have to have some sort of capitulation event. Because I think by the time where we are now, most of the weak hands have been flushed out. Just look at that chop. So many hands have been flushed out there. And I think the veterans are holding still.
You talked about the 60-day cycles, and we follow this quite closely. We don't really trade it as such, but we're using it more as a mental construct to say, well, hang on, if we've had a decent run up, remember it goes the other way as well. Like, this is a nice little mental reset. You've labeled the potential for a 63-day cycle low here, because remember, these numbers represent how long since the last cycle low. A very choppy cycle. We had that big dip in the middle. Looks pretty textbook like that would be the place to start a new cycle.
It does. The thing is, well, I just pointed out that if that is low, it would be 63-day. It's undecided right now from my perspective. And I was watching Bob Lucas talk about it, and he was saying potentially, if we don't sort of see the rise up here into that bullish structure, that's not the best. He was sort of hinting at more consolidation from what I could gather. But well, like I said, that's sort of what I'm expecting too. If we don't see a good bounce from here, still, it's very hard to say. And I'm having the same sort of situation where I was in the last video, where I was saying, you just don't know right now. And all my indicators and metrics are pointing towards that, more or less.
And I did look at some of the stuff he was saying as well, and I think he was sort of indicating that if it had stopped around here, it wasn't as strong as if it had one more move down. So he actually felt this was a much stronger position to be in than this, which does make sense, because that was a nice sharp sell-off low, whereas here it was very sort of, it wasn't what you like to see as a clear sort of spiky type bottom, or top for that matter. So I think it does make sense from what he was saying that this is a more likely candidate.
Yeah, and I'm going to take the one in the middle, how we had that wick down quite ferociously. I'm going to view that more as a black swan sort of event, how we had the Japan situation there that caused that excessive fear in the market. So whether that, not going to class as a natural 60-day cycle low, because it wasn't a 60-day cycle low, it was like halfway through, right? It was like 30 days.
Yeah.
But where we are now, that would be a more valid low if we were to hit it. But I'm not going to hold any particular bias right now, because I don't feel like I can stick with one.
And your volume profile, you've talked about this a lot, and talked about the ranges that we're in, and it looks like we're out of that range now.
Yeah, we are. That's why I said that's why I'm of the perspective it's quite important we find that support and trend up now, more or less, because otherwise that we're really falling out of the range, to be honest. If we do we're already out of it, right? But there's potential to get back in if we do start to claim that green level, which is the value area low. I've accidentally leveled at value area high, but it's the value area low of the range. That would be resistance until flipped, approximate region, give or take, but where we are now, it's indecision. That's the sad thing about it. So, yeah.
And you started doing this sort of over the last couple of months, looking at it, what's going on with Bitcoin compared to what's going on with the S&P, really just to give a bit of an indication of the general direction. being correlated recently.
Yeah.
Is that still at play here?
It is definitely. The only difference is obviously Bitcoin's more extreme in the moves. That's why you can see the percentage. I believe it's done on a percentage scale.
Yes.
So yeah, right now we're sort of just in line with what the S&P 500 is doing. So obviously, if you zoom it out a bit more, we're not entirely in line. But if you zoom it on the lower fractal, you can see that we're quite in tune with everything, which is fine. So there's nothing too much to add to this one. We have to see how this plays out and sort of later down the track.
And this has become one of my favorite charts that you keep bringing along, partly because I don't know where to find it. So whenever you bring it up, I'm looking at it for the first time. And I get very excited by it.
Yeah.
Clearly, in this zone here, that was the damage that was done by what you were referring to as sort of what was happening with that Japanese yen, carry trade unwind, and there's just no real lines there or nothing exciting to look at. My eyes are drawn to this heavy lot of liquidity up here. Is that just me being biased, or?
It definitely makes more sense, especially where we are. September is typically known to have sort of red months too. What I've seen too. So you can't expect too much. But right now, I think it's appropriate to bias yourself towards that upper band and say, yeah, that's what I want. That's what needs to be hit. I mean, if we just look at every cycle from this point onwards is when we start to see those increases. So you'd be going the opposite of what typically happens. You'd be going the opposite of what we're expecting with global liquidity. But of course, the midterm ebbs and flows, right? That's the thing we can't really know.
Yes.
It's what we try and do with the technical side. But where we are now, I just want to point out the liquidity is quite low on each side. So that gives on the horizon potentially what if, during these environments, we can have large increases in price when liquidity is low and there's not much stopping us to the downside or the upside. So things can happen quite quickly when you least expect. So I just want to keep that out there for people to know.
And that visually, that really highlights that perfectly, that these are the periods where you're going to get the big out of nowhere moves, because there's nothing. I like how you frame that. There's nothing in the way. This is things in the way when they're much darker, because there's a lot of Bitcoin changing hands at those levels. If we're not seeing them, there's not a lot changing hands, so it can glide through them, cut through those levels really quite easily.
And it's like I was saying, this trading range has washed out people. I guess you can see that with the bands, and you can see the coloration as we've gone further along. It started to get lighter and lighter in terms of what's going on. But that being said, these charts can change because there are stop losses that are involved in this. People can take them away and etc. Because this uses quite a large array of different metrics in terms of like liquidation levels too. But yeah, definitely on the horizon. Keep that note. So I would be looking at that one for sure.
Well, that's got us through all the charts that we like to look at. I think, again, highlights what everyone's been saying, that it was a bit of a choppy month that we had, so that second half of August and into September now, and potentially a little bit more chop ahead. But overall, how do you feel about that, Joe? We'll start with you for your wrap up. Sort of, is it really nothing's changed in that bigger picture, and we've got to really zoom out and ignore to some degree what's going on here? What's your final thoughts and wrap up?
Yeah, I'll maintain the bullish bias just based on what we spoke about during this episode. In the short term, 2, 3, 4 weeks, I'm not really too worried, but I'm looking towards seasonality in the the last quarter of the year, how Bitcoin usually performs, how liquidity is going to be affected in terms of what particularly the US are probably likely going to spend into the economy. So yeah, I'll maintain that, and I reckon I know what Isaac's going to say.
Over to you then, Isaac.
I agree with what Joey's saying. It would be silly not to agree with what he's saying, because you'd be going against history, right? But in terms of the short term, I'm expecting more consolidation. I will say this though, liquidity is quite low on both sides, so it wouldn't surprise me if we did see a shoot up in price. So I wouldn't be surprised if it happened. But in terms of what I would be expecting until the next update which will be in around a month, more consolidation, potentially a bit higher, is what I will say. But obviously we have that the macro backdrop, and I'm not going to change that. Everything is pointing towards higher later. So yeah.
I'll take the glimmers of hope in there. I think I mostly sort of agree with that sentiment, Joe, that you were saying before, that we know traditionally that we're coming into that period that should be quite strong. And I would actually argue a lot of the negative, particularly that sentiment stuff, is extremely bullish. Like, I know that, it's a contrarian move that people don't necessarily understand, but people being negative when everything looks so perfect on the horizon. And we're not talking the distant horizon, we're talking sort of over the next 3 months, is extremely bullish as far as I can see. So I'll maintain my my hopium that we've sort of hit that low there now, and that it's probably smooth sailing ahead. So fingers crossed on that. But we'll no doubt in a month have a much clearer picture. So we'll adjourn here, and we'll come back in a month and see where we ended up. Thank you both for your effort and work on that today. Really appreciate the deep dive and the multiple perspectives. I think the audience does as well. So thank you for that.
Yeah, it was great.
No worries. I'm very much looking forward to October.
When will this September end?
Yeah, 100%.
Once again, thank you everyone for watching. We'll chat again soon.